Good morning, everyone. Welcome to Thorney Technologies briefing for the half-year results, which have just been published last week. Thank you, everyone, for joining. Good to know that the supporters are still there, and hopefully some new people listening in to our story. And our story was a good one for the first half year of this current year. That is the year from June 30, 2020 till the end of December 2020. During that time, ladies and gentlemen, we grew our NTA after tax, after fees, from 33.8 cents per share to 42.1 cents per share, which was up about approximately 25% for the half year. And further in January, our stated NTA was 44.4, which was up 31% from June of last year. February has also begun well with some of the issues, but obviously, and we'll talk about it in a minute, the markets are a bit more sensitive at the moment, a bit more frothy. NASDAQ was down again last night, and it's an interesting period going forward for tech. Just to point out, ladies and gentlemen, that since we started Thorney Tech only a few years ago, we're up over 100% in growth in NTA. So we're very complimentary of the team within the Thorney Management Services, and very thrilled for the support that you've continued to show us. And we're happy to see that the share price has been responding along that journey from our initial outset a few years ago, as I said. Net assets have grown, obviously, in volume as well as in percentage growth. We're now a meaningful size boutique player, I suppose, in the tech sector. When I say meaningful, that means that our deal flow is very preeminent, I think, amongst players in the tech sector. That is for both pre-IPO and early stage investing, as well as in the IPO market itself and in the aftermarket. Boutique, I mean, in the sense that we're still relatively small compared to the bigger funds, but that enables us to hopefully be more nimble, more agile, both in dealing with how we trade in the public markets on the listed companies, but also how we position ourselves and balance the equation between listed and unlisted, bearing in mind, obviously, that the unlisted are illiquid investments until such time as they have a trade sale or, in fact, they IPO. So our message a few years ago, a cycle of the tech companies, and we've fulfilled our mandate, I think, quite well, and we've followed that journey as described quite accurately, increased our knowledge, penetration into the markets, both in Australia and in the international markets to some degree, such that quite a few of the unlisted investments, in fact, are ones from overseas that we're quite excited about. So again, ladies and gentlemen, thank you very much for being part of that journey. And we will just talk about the overall markets for a minute. And I will just mention that in a few minutes' time, we're going to have the first of our two speakers today. We're looking forward to both of the speakers. They're both very talented executives, both heavily invested in their own success from an equity point of view, and both very driven individuals. I think you'll enjoy hearing some of the conversation from them and some of their comments on two very, very interesting companies, although not related at all. So different spheres we're going to hear about today, but nonetheless, both very exciting. And just a few more comments on Thorney's performance within the wider framework of the market. So in terms of the markets, we're seeing now a bit of a shake-up going on in terms of, as I said, the NASDAQ being down over the last period. What's been driving this change of sentiment in the last few weeks has been something that we referred to quite actively last year, and people were commenting that that's not relevant at this point of time. You're talking about something that's years away, and don't worry about it. But in fact, we did worry about it, and that was the issue of the movement in interest rates and the concern that inflation would actually would come come to the fore again. And for those of you old enough like me, we've seen the cycles of inflation and deflation many times over the years, and the impact that it has on asset classes, particularly on interest rates, long bonds, short rates, and of course the equities market. So we have the US 10-year bond, to use as an example, has virtually doubled in about 6 months, from 0.75 to around 1.5%. Now, traditionally, when rates go up, there's a sort of a view that it's generally good for the economy, in the sense that you've got GDP growth and economies are turning over well and showing productive uplift. On the other hand, there's a big question about cost of capital and how to fund your businesses, and how sensitive are businesses to the debt that they're carrying. And a lot of companies are still carrying a lot of debt because rates were cheap and are still relatively cheap. So a lot of people, a lot of companies have piled on debt, as have individuals for that matter. So there is a big rotation that has started. And I think the numbers are quite enormous from what I've read. It's like 50 to 100 billion already that have moved out of the tech high growth sector into more traditional value sector. And for those of you who are involved in Thorney Opportunities, which we're going to speak about in about half an hour after this, that is relevant to the portfolio in Thorney Opportunities, which is more a value-driven set of companies that we've invested in. However, what does it mean for technology as this rotation takes place? In the short term, it means that some prices have come down, and the sensitivity to the valuation matrices that are being used over the last couple of years to see some astronomical moves in those companies. Doesn't mean that those businesses that you're backing have changed fundamentally, that the growth opportunities are still not there, that the disruption that they're creating has gone away. It certainly does not. Those that have shown momentum in that space and have made an impact are likely to have bigger impacts and gain bigger market share, and have to keep investing to hold their position and indeed grow it. And that's what we're still looking for at Thorney Tech. What are those companies that can have a long-term impact within a cycle of some movement in interest rates and some relocation of funds? Because those companies that can still deliver and perform and have an impact and disrupt and capture new markets through their tech, they will continue to perform. And indeed, these dips might in fact be buying opportunities. And that's what we do at Tech. Sometimes we sell companies that we like when the price has got too high, and then we have an opportunity to buy them back because we've done the work on the companies. We understand what they're trying to achieve in terms of their vision. We've got to know some of the executives and how capable they are, but fundamentally we see where they're trying to position the company. So, for example, Zip, which is the largest company that we hold in the tech portfolio, and a company we've got a lot of admiration for, we were selling some when it reached a high of around $14 recently. And more recently, in the $10 range, we've been buying back some of those shares. Afterpay the same. And so many other companies in the portfolio, we will tweak around our position, free up a bit of cash in order to go back in if in fact the market corrects, which is what has recently happened to some degree. So we are not fussed about the short term in terms of the market moving. What we do concentrate is on the companies within the portfolio and what we believe their potential are. And as we said, at the right pricing, we will enter into the investment market to build a position or add to our position or replace a position that we may have sold out or down for. So that's what we've been doing quite actively over the last little period, but it's consistent with the pattern we've showed all the way through since the beginning of Thorney Technology. So again, we're very happy with our results. And just another comment, generally we split the portfolio about 65 to 75% of listed companies and 25, 35% unlisted companies, and that's modified by whatever we are in holding in cash. And obviously, we've got a bit more cash than we had last year because not only we turned over a few investments, but we did a capital raising, which was very well supported. And thank you again to shareholders of $37 million last year. So that's a quick overview. And it's now time because he's overseas. We don't want to keep him waiting. But I wanted to introduce the chairman and key executive for this very interesting company called Banksa. Banksa has Australian roots with the principals involved and also the early shareholders, but is recently listed on the Toronto Exchange. And we'll ask Dominic Caruso why he did that shortly, but I'll let Dominic speak. But it is basically a payment service provider for the digital asset space. Now, there's been so much talk about cryptocurrencies, Bitcoin or Ethereum or others of late. Even Elon Musk entered the fray recently, which sparked a bit of a frenzy. But Dominic has taken a different approach to how to build this business and how to capture the excitement of cryptos without being directly involved. So if I can, I'd like to introduce Dominic, who has deep knowledge in the crypto ecosystem. And Dominic, are you there?
Yes, Alex, thanks for having me today.
Well, Dominic, rather than me try in layman's language to explain what fundamentally Banksa is, and congratulations on the successful IPO and what you've achieved so far, which to me looks like only the beginning of what I think is a very, very exciting journey.
Yes, certainly. Maybe before I get into Banksa, I can just try and paint the picture for, I guess, a lot of people out there that may not have, direct knowledge or an understanding of the whole market. If you look at, crypto and Bitcoin is, I guess, the coin that most of people have heard about before. In the early days, from 2008, 2009 to even a number of years ago, it was really the domain of the tech nerds. And what we've really started seeing is a big shift from the tech nerds to the major institutions. And I know you mentioned Tesla, and there are a number of other examples of different companies now starting to dip their toe in the water. And that's really and if you want to sort of put Banksa into a box, the best way to really categorize the company, we are the PayPal of the crypto market or the digital asset market. And our vision is to connect the existing fiat world. And when I say fiat, I mean the Australian dollar, the US dollar, the euro world with the digital asset world. And the reason why we believe this is very important is when new people want to get involved in the sector, they don't start with Bitcoin or Ethereum. They start with some Australian dollars in their pocket, for example. And so we are building the infrastructure, the bridge that connects the fiat world with the digital asset world. And the way that we make money is obviously clipping the ticket anytime someone uses our infrastructure.
Right. So just taking you back 1 minute, I think what you said is there's a different dynamic happening in the market from which has transitioned, I guess, over a 10-year journey, such that we're on the cusp, or maybe we're at the point where the wider population and indeed vendors are accepting cryptocurrencies as something more than just something that was technically in the background and people didn't understand. It is becoming, or is on the cusp of becoming, much more of a mainstream utility to it.
Certainly. Just to maybe provide some, I guess, context, if you want to use the analogy of, let's call it the internet boom, we are, in my view, 1995, 1996. We're actually still that early in the evolution of the ecosystem. And some of you may have heard the concept of, DeFi, which is decentralized finance, which is just really taking the let's call it the existing financial institutions and the products that they provide, but providing that on the blockchain. And so really the way that Banksa fits in is really about the payment infrastructure, where the picks and the shovels that really connect the old world or the existing fiat world with the new world. And I don't believe that digital assets will actually replace the fiat world. They will just live side by side. And there'll be many reasons for that. Part of it is just the efficiency of the system. And the fact that it's effectively, it's distributed and it's global, and it really democratizes finance to many people around the world.
So why would someone go to transact with Banksa?
Our business model, just to delve into the company, is that we are a B to B to C company. And what that basically means is that we provide our payment infrastructure, as well as our AML KYC compliance, because we are regulated in Australia, as Canada, and a number of other countries, because crypto these days is a regulated space. So we provide all of this effectively in a wrapper to our customers, who are some of the largest exchanges in the world, like Binance, Huobi, and OKX. And so we allow our customers, the major exchanges and the major wallets, to onboard new customers without having to worry about payment infrastructure, the regulation, the regulatory layer, the licenses, as well as we call that the liquidity, the delivery of the coin. And to date, we not only offer Bitcoin, but Ethereum and stable coins like USDT on our platform. And as a new coin comes up that becomes popular, we can add that to our platform as well.
Right. So how does Banksa make its money, Dominic, through this process?
We clip the ticket. So we make money both in terms of commission and spread. And just to give you some context, in the December quarter, which we just announced, we reported just over $111 million of TTV, total transaction value. And so we make a margin on that. And in fact, for the December quarter, on an underlying basis, the business was actually break even. And we've already announced in January that our TTV just for January is 55 million. And in fact, you'll have to wait for next week, and we've got some further announcements with regards to further growth in the space.
Well, I'll certainly be holding my breath for that. But really, what you've been showing is sort of month on month significant growth, and these last, certainly last month, and hopefully this month will represent record total transaction volumes for you guys. Is that correct?
Yeah. Without wanting to I'll just take a step back and say, what we've mentioned before is, we expect the trend to continue. The business December half versus PCP, we're up 780% PCP, and we expect this trend to continue.
Which is enormous, albeit off a relatively small base, but that small base is getting bigger. So a lot of people have asked me, how is Banksa directly affected with the price movement of Bitcoin, because we've seen that going up and then down and up again. The actual volatility of the underlying crypto, what's the impact of that on Banksa?
Yeah, that's a really good question. So first and foremost, if the Bitcoin price goes up or down, it actually doesn't have an impact on our business. We clip the ticket whether or not it's going down. The key factor in determining how we're performing is actually volatility. And for anyone out there who's actually been following Bitcoin and Ethereum, you can attest to there's significant volatility in the space. And so from my perspective, it's music to our ears when we hear about volatility, because that's actually good for our overall business. So people will, because just to take a step back, we offer what is called the fiat on-ramps. So you convert AUD to Bitcoin, and we offer the fiat off-ramps where you convert Bitcoin to AUD. So anytime people effectively use that infrastructure, we basically clip the ticket. So we're the picks and the shovels of the industry. And if you work on the hypothesis that the Bitcoin market, the crypto market is only going to continue increasing, increase in popularity and importance, then I believe that Banxa is very well positioned to take advantage of this growth.
Right. Well, certainly the history of Thorney, actually, through the booms and the downfalls of the mining sector in Australia, has been very much to focus on the picks and shovels, on the engineering firms and of the equipment firms related to it, and it's been a very successful journey for Thorney, and part of the origins of Thorney. So we definitely were attracted to this type of model, where we're not exposed to the prime risk of the underlying currency, but we very much exposed to the increased transactions that occur and the excitement and, as I said, the move towards a more mainstream acceptance of those currencies. So we're very excited with the position of that. Now, why did you choose to list in Toronto as opposed to Australia, and more recently, I think, on the Frankfurt Exchange in Germany?
Yeah, good question. As part of our research, because we were trying to build a global company, we actually met with exchanges in Australia, Singapore, Hong Kong, and Canada. The Toronto Stock Exchange was the most open to blockchain and digital asset companies. And it's to a degree, it's unfortunate that the ASX, hasn't taken a different view. There's only a handful of companies in this sector actually listed on the ASX. However, I think if I take a step back and look at, the real reason, in my view, is I believe that Banxa ultimately belongs on NASDAQ. And there is a very, I won't say easy, because nothing's easy in this world, but there is a transitional process from the TSX to NASDAQ at the appropriate point in time, giving us access to the US investors and the North American market, which is really a very important market for us.
Well, it seems on face value, based on your growth rates, and even though a smaller company, that others, competitors, are trading at higher valuation levels. Is that partly, do you think, because you're not on NASDAQ, or partly because you're just a new company to the listed markets?
We only listed the 6th of January. So, we've only been listed, as I say, only for a couple of months. And there are other companies that are, let's call it, at the same level in terms of the evolution of the company. And, one of those is Voyager, which is listed on the Toronto, listed in Canada. They have a market cap of about $2.5 billion. We have a market cap of just over 100 million. They've been listed for a couple of years, and we've been listed for a couple of months. So we're just really starting to, build our network with investors in the US marketplace. And in fact, in the next couple of days, we'll be listing on the OTCQX, which means that any US investor will be able to buy stock in Banxa, through their online account or through their full service broker. And I believe, having seen some of our peers in the space, I believe that will help increase the liquidity in the stock, but also the valuation of the company.
Okay. Well, Dom, I won't keep you too long. I know it's early in the morning somewhere where you are. But I did want to give the Thorney investors and shareholders an opportunity to see a company that has transitioned from our involvement, certainly a couple of years ago, before it was listed, and through a couple of capital raising stages, to a successful transition in the IPO markets. And I think certainly initially in the aftermarket, albeit only for a month or two. And I think it's going to be exciting as research firms start to delve into the potential of the company, and and challenges but opportunities. And I'll be interested to be reading some of those reports as they come out. But again, I wanted to congratulate you. It's a fantastic little company. And Dominic understands the space extremely well in terms of that whole ecosystem. He's chosen this path through Banxa, which I think is a very exciting way to have exposure to the sector without too much underlying risk. So congratulations, Dominic, and keep going. Don't take your foot off the pedal, and let's see how this journey plays out. So thank you again for spending some time with us.
Thanks, Dominic. Thank you for your support as well, Alex and the team.
Yes. Okay, Dom, all the best. And
thank you.
We might move on, ladies and gentlemen, after I hope you saw a very interesting company, and Dominic, who's a very talented individual, to another very talented man who we like a lot, Phil Hodgson, who's from Calix. And I'm not going to try to explain the technology that drives Calix, but I will say that they do have a lot of patented technology, providing industrial solutions, addressing issues that are very topical today, as they should be, which is global sustainability challenges. And his core technology is being used to develop advanced bat protection, aquaculture, wastewater, carbon reduction. And so it's a really fascinating company. And Phil, can you hear me?
Indeed, I can, Alex.
Okay, thanks for joining us. And for those of you who followed Thorney Tech for a couple of years, Phil was kind enough to present when you could in a physical crowd of Thorney Tech shareholders, and gave us sort of some examples of what he wanted to achieve over the next couple of years. That would have been in 2019, I guess, Phil, maybe 2018. Back then, the share price was probably a quarter of what it is today. And Phil was in the early days of giving presentations. And I think hopefully we'll hear the story about what he's achieved in the last couple of years, which is terrific, not only in Australia, but in different parts of the world, where he's active now in the US and particularly in Europe. And it's a very exciting journey. And Phil, over to you. If you can just give us a little bit of a brief overview of the Calix without going into every single thing Calix does, because it has got many tentacles. But what are the key lines of business, perhaps, that you can take us through, and what's exciting you that you've achieved over the last couple of years and looking forward?
Yeah, thanks very much, Alex, for your time this morning and for everyone's time this morning. So yeah, Calix is, as Alex said, a fairly complex beast, but let me simplify it down to just one core technology. We just have a core new mineral processing technology, which is basically a new type of kiln. And we can process all sorts of different things through it. And some of the things that we're processing through it, we actually make a water treatment product. And so we actually have growing revenues in a water treatment business. And over the last couple of years, Alex, you might have seen that business grow from 1.5 million in the half to 9.3 million. We just completed our first half there. So that's growing quite nicely for us. So we're actually a technology business, but with real sales revenue. The other things that we've managed to achieve in the last couple of years is there's several other lines of business that we're developing, all from that same core technology. And again, our half-year results, the income on those other lines of businesses, usually associated with projects or grants that we're very successful to go out and get, by the way. That was another 7.3 million of income. So we've been very successful in developing the applications of our technology with government money and project income. And so over the full half, we're up to sort of around 16.3 million Aussie, which, yeah, compared to a couple of years ago, Alex, was probably down around 3, I'd say. So yeah,
yes, and probably that most of that was probably grants, whereas here we're getting external revenue coming in now. So congratulations on that. and living up to the potential that you talked about.
Excellent. Thanks, Alex. Yeah.
Now, one area in particular that I might get you to focus on, and it's quite topical here because Australia's leading businessman, who I've got a lot of respect for, Twiggy Forrest, has been talking about green this and green that, and you're certainly in the middle of what I would call the particular green cement. Am I right? Adjective to put on what you're doing?
Indeed. Yeah, the one aspect of our technology, that same sort of core kiln or furnace technology, is that when you're making cement or lime, you put limestone through it. What a lot of people don't realise is half the weight of a lump of limestone is actually CO2 trapped in the rock. And when the cement companies and lime companies make their cement and lime, they release that CO2 out. And that just goes straight up their stack. And that's why the cement and lime companies are contributing 8% of global CO2 emissions. They're the largest industrial emitter. But if they use our kiln instead of their kiln, their sort of kiln that's been around for about 5,000 years, it hasn't changed that much. If they use our kiln, that CO2 that comes out of the limestone, we actually can separate that directly. So there's no extra processing or chemical steps or anything. That CO2 can be separated directly with our kiln. So the key aspect of the technology that's of interest to the Heidelberg Cements and Cemex of the world, where we're developing this technology over in Europe, is that CO2 separation for no extra theoretical energy penalty. So yeah, that's I guess part of the real.
Yeah, look, that's extremely exciting. I mean, it does seem that Europe is setting the standard and aspirations in this regard faster than anywhere else in the world, and they're prepared to support it through some funding opportunities as well. So perhaps you can explain to the audience about the kind of reception you're getting in Europe in the sustainability space.
Yeah, so certainly, Alex, resonating very strongly over in Europe. We were successful to raise 12 million in grant funding from the EU, yet still retain the IP within Calix to develop this technology with the Heidelberg Cements of the world. We put a pilot plant there, we built it, we finished it in 2019, and that proved the technology concept. That's about a 5% throughput of a standard cement plant. And then we were successful getting another 16 million euro from the European Union late December 2019 to actually scale that up. And we're right in the midst of that project now. So a lot of interest, and you would have seen maybe in January, Cemex announced they were joining that project. And not only just the big cement companies, we have the big utilities companies in there like Engie. We have the big chemicals companies, part of the consortium, like Solvay, all of which are interested in decarbonising basically cement and limestone for their own businesses. But also, say, a utilities company is interested in our technology because we don't care how we heat our kiln. We can heat it with renewable electricity. And that's why Engie, for example, is interested in looking at load balancing opportunities as the grid decarbonises.
And so do you think as you progress and prove yourself up further, you might in fact become regarded as the new standard of how these things may be required, either from a regulatory standard point of view or just from a best practice point of view?
Yeah, so what we call that is best available technology. We want our technology to be recognised as best available, and therefore the standard under which the EU then either penalise by giving, reducing the carbon limits that plants are allowed to emit if they haven't implemented that technology. We do have a couple of competitors in that space on the CO2 separation piece, but none of them have physics on their side. Physics says that we are no theoretical extra energy. And so at the moment, Heidelberg Cement have publicly said we're sort of 25 euro per tonne or less of CO2 captured, and the closest technology to us is around 40. We've still got development to go, but theoretical physics is on our side with respect to how low we could go in terms of our cost to be best available technology.
Right. So just moving from the green cement and lime for the moment to another very topical area where tons of capital is going towards, which is in the battery space. Can you talk a little bit about your potential as regards that area?
Certainly, Alex. This again, people might be thinking, well, how could they be in batteries as well? It's water so far and CO2. Well, batteries, it's just a different mineral. It's the same core technology, but we start with manganese, just a different mineral. But what a lot of people may not realise is manganese is the key material in the cathode or the positive end of a lithium-ion battery. And the reason your phone starts to lose charge over a couple of years is all that cycling degrades the cathode. And what we can do with our special kiln is make a much tougher manganese. We can make a sort of crystal of manganese that's quite porous, allows the lithium ions in and out more easily, so it doesn't sort of shatter the crystal, and the crystal is actually quite flexible. We've just released, as of November last year, our first year of research and development on our manganese-based cathode material, and the results were very promising. And so we're expanding now to something that's commercially relevant as in a pouch cell made with our cathode material. And what's also of interest is manganese is the cheapest component in the cathode. A lot of people add nickel and cobalt and these sorts of things, and we're trying to avoid that altogether. So we're after cheap, safe, and better performing cathode materials, all with the same sort of core technology.
Right. So you've obviously got a suite of opportunities, and the challenge for management and the board, I guess, is to select those priorities and nurture some of the others along. Those you're doing with collaborations, I guess, on the technical side, and also with commercial partners, as you've mentioned, a couple of them. So the challenge of sorting that through, and I guess some key milestones that you might be looking forward to over the next 12 or 18 months?
Yeah, always a challenge, Alex, when you've got quite a few opportunities in front of you, but rest assured, we're sort of laser focused on a few things. It's got to generate a great margin, and it's got to be a multi-billion-dollar business before we'll put effort into it. And all of the sort of lines of business we're developing tick that box. If I look at the water line of business, for example, as you've seen, sort of it's been a nice revenue growth period. We've acquired a business in the States. That acquisition has gone very well. We're going to look to acquire and enter the European market with our water treatment business along similar lines to the States, our successful entry in the States. In our CO2 business, obviously we're onto our second sort of scale-up project now. We want to pass the sort of basis of design milestone this financial year and then move into the detailed engineering on that. And that's for a scaled up plant in Hanover in Germany. On our advanced battery piece, we want to get those commercial pouch cells done and thousands of cycles of testing. So if we can get to 3,000 cycles without too much deterioration, that's a 1,000,000-mile battery. So that'd be really nice to achieve. There's a couple of other little skunk works we've got going in what I call biotech. Marine coatings is another area that we're looking at with some active particles we're making that looks very interesting. And I guess most recently, we've got what we're calling a sustainable process line of our business, where remember our kiln is one of those very flexible in terms of energy. We can electrify it. And in fact, talking about ESG themes, that's been the source of most inquiries coming into Calix over the last 6 months. An electrified process, an electrified industrial process is of great interest if you can connect it already to renewable energy sources. And you would have seen a recent announcement just earlier this week where our technology is being looked at for baseload energy storage in what's called a thermochemical cycle. But there's lots more to come in that space, Alex. So that sustainable processing space is one to watch for the next 12 months for sure as well.
Right. Well, I won't take up more of your time then, Phil. Thanks so much for, again, spending time with us. We're a very happy shareholder, and we look forward to enormous things coming out of the company over the next few years. And we certainly see this as a longer term journey for Thorney Technologies. And again, to shareholders who are listening, this is a really interesting company with many, many shots on goal around that core technology that Phil talked about. Phil is very capable, as you would have heard, and he's got a good team of people around him. He doesn't take fools too lightly, so I'm sure he'll keep them all running at top speed. And as he said, he's reaching into multi-billion-dollar markets. It's global, and as tech should be. And that's exactly what we want to back at Thorney Technologies, and particularly where it's got an Australian connection. So thanks very much, Phil. Look forward to catching up soon, and look forward to following up on some of those milestones.
Excellent. Thanks very much, Alex. Thanks for your support, and thanks to you all for your time this morning.
Thanks. And ladies and gentlemen, I'll just, I hope you agree that we've just had two really interesting companies and two, as I said, very capable executives at the helm. They're very different in nature, but it just shows the diversity and spread that Thorney Technologies is prepared to delve into and ultimately invest into if we see their potential. And I just want to conclude by saying we've had a very successful 6 months, as I mentioned, in terms of results, in terms of NTA. But the other point that was very clear to come through is that we had quite a number of our pre-IPO and earlier investments, in fact, IPO and come on successfully. That is, the share price was well above our entry price, and the IPOs generally performed well. And I'm happy to say that within our portfolio, we've got a number of others within the Australian unlisted portfolio who we hope, subject to the markets, of course, will come to the market in the next 3, 4, 5 months, and also in the unlisted portfolio. Now, the biggest unlisted position is called Updata, and Updata has steered its path very well through the COVID challenges. We hope that this 2021 might be one where they re-enter the listed environment, having been listed previously in Australia. So we're hoping for an outcome in that regard to give us a liquidity event. But there are others in the international portfolio that we think have that potential also during 2021. So we're very excited with our position. We recognize some of the frothiness in the market and the moves and the challenges there in the short term, but we have an absolute belief in a lot of the companies we're backing that they will go through whatever cycle in the markets and come through the other side as very interesting companies that we can be proud of having been an investor in. So thank you very much, ladies and gentlemen, for listening to us. We'll let you know when the next briefing will be, and we look forward to your ongoing support and delivering an outcome for you as a shareholder alongside myself. Thank you very much, everyone, and be well and safe.